All right, so today we're going deep on the whole global finance situation,
Yeah,
trying to figure out where to put your money right now.
right.
It's
It's a little messy out there.
it is a little bit messy.
Yeah.
We're trying to, cut through all the noise and all the headlines and
Yeah.
really get down to what's actually happening and then,
I'd say.
what, you know, the learner can do about it.
Exactly. We've got this new investment analysis we're looking at. It covers a lot of ground.
Okay.
Everything from, economic data to what's going on with those new US tariffs to
Right.
what the experts are saying about where things are going.
Right.
IMF, World Bank,
Yeah.
all those big names.
Yeah.
So we're really trying to give you the big picture
Right.
of how all these global things are, shifting and changing,
Yeah.
what that actually means for, your investment decisions.
Okay, so let's start with inflation. I
Yeah.
know there's been a lot of talk about inflation, and it seems like globally things are
Yeah, it seems like it's cooling down a bit.
cooling down a bit.
You see the OECD and the G7,
Right.
their numbers are lower at the beginning of the year.
At the beginning of 2025.
Yeah, exactly, 2025.
Okay. So, but is that everywhere or is
Well, that's the thing, right? Like
Yeah,
you see the global numbers are slowing,
right.
but when you actually look at specific regions,
Yeah.
you get a little bit more of a mixed picture. So the Eurozone, for example,
Yeah.
their inflation has actually come down quite a bit.
Okay.
But then you see Italy, and
Yeah.
it's actually ticked up a little bit.
Right.
So it just reminds you that, those big averages don't always tell the full story.
You got to look.
Yeah, you got to dig a little deeper.
Yeah. Okay.
And one thing to keep an eye on, too, is service inflation in the Eurozone.
Right.
That's proving a bit sticky.
A bit sticky needing. It's not
They're
coming
not coming down as fast.
down as fast. Okay.
Yeah.
So what are the central banks doing in response to all this? I mean, are they
Well, so far,
cutting rates?
they're kind of holding steady for the moment.
Yeah.
So the European Central Bank,
Right.
they kept their rates the same in March,
Okay.
but the feeling is that they'll probably cut them later on this year.
Okay.
The U.S. Fed did the same thing.
Okay.
They kept rates steady in March.
Right.
But again, expectations are that
Lots are coming.
cuts are coming
Yeah.
later in the year.
Okay.
So it seems like
Just
they're
trying to encourage.
yeah, they're trying to,
Encourage more
more
people.
economic activity.
Right. Exactly.
Although, mortgage rates in the U.S., those are still expected to stay relatively high
Okay.
for the time being.
Okay. So moderating inflation, at least in a lot of places,
Yeah.
and the possibility of lower interest rates.
Right.
What does that mean for the bigger picture of economic growth? Like, what are
Yeah.
the projections for this year?
The forecasts for global GDP growth in 2025 are okay.
I'd say generally kind of in the moderate range.
Okay.
You've got the IMF at 3.3% growth,
Okay.
World Bank a little lower at 2.7%,
Right.
OECD 3.1,
Okay.
S&P Global 2.5.
Okay.
So, it's kind of all over the map,
But generally
but generally moderate.
moderate. Okay.
The U.S. is actually expected to do a bit better
Yeah.
than the Eurozone and Italy.
Okay.
Those projections are a little more subdued.
Okay.
So it's kind of a,
Cautious.
cautious optimism, I'd say.
Okay. Yeah, that makes sense.
Yeah.
And then what about the job market? Like, how's that looking?
It's actually pretty stable.
Okay.
Across the OECD, unemployment's holding steady at 4.8%.
Right.
The U.S. did see a little uptick recently up to 4.2%.
Okay.
But both the Eurozone and Italy,
Right.
their unemployment rates have actually gone down.
Okay.
So it's
Some places are doing.
yeah, it's mixed. Some places are doing better than
Yeah,
others.
Okay.
I want to talk about these new U.S. tariffs.
Okay. Yeah.
Everybody's been talking about the Liberation Day tariffs.
Right. Yeah, these are a big deal.
Yeah. I mean,
What are the experts saying?
well, the expectation is that
Yeah.
they're probably going to lead to higher prices
Okay.
for consumers in the U.S.
Right.
And it could actually, slow down U.S. economic growth a little bit.
Okay.
But I think even more broadly than that,
Yeah.
it's just, it's creating a lot of uncertainty
Right.
in the global economic outlook.
Yep.
People are worried about trade disputes,
Yeah.
escalating, things like that.
Well, and we saw that in the stock market.
Yeah, exactly. I mean,
Right.
the stock market did not like this news.
Right.
Um,
So then what about the outlook for specific types of investments? Like,
yeah.
what should people be thinking about with stocks?
So stocks, they definitely took a hit.
Yeah.
But some analysts are still saying there's potential for growth
Okay.
by the end of the year.
Right. They are factoring in, those tariff worries.
Of course.
But there are sectors, like software, healthcare,
Hmm.
consumer staples, energy.
Okay.
Those are seen as maybe a little more stable.
Yeah.
Interestingly, there's actually a pretty positive outlook
Oh,
for
hey.
some Chinese tech stocks,
Okay.
particularly, kind of the new economy stuff over there.
Interesting.
Yeah.
Okay.
On the flip side, though, industries like autos, airlines,
Right.
parts of the tech hardware industry,
Oh,
those are
looking
looking a little shaky.
a little shaky. Okay.
Yeah.
And then what about things like bonds and real estate and gold? Like,
Okay, so bonds,
yeah.
government bond yields have been pretty stable,
Right.
actually trending down a little bit.
Okay.
Because, with those interest rate cuts anticipated,
Yeah.
that makes longer-term U.S. bonds look
Okay.
a little more attractive.
All right.
Real estate's facing some pressure
Yeah.
from those high mortgage rates we talked about. Right.
Keeping sales and inventory pretty low.
Okay.
And, just modest price increases.
Wow.
Commodities, they've been hit hard,
Okay.
particularly things like copper,
Right.
crude oil.
Yeah.
And that's because, there's this fear that the tariffs could actually
Yeah.
tip the economy into a broader slowdown.
Recession.
Yeah, exactly.
Okay.
But on the other hand, gold's looking pretty good.
Yeah.
It's, it's that classic safe haven
Right.
when things are uncertain.
People flee to gold.
Okay.
Exactly. So given all of this, what are some of the big trends that, the learner should be watching out for? Like, what are some of the...
I think the big one is just volatility.
Yeah.
I mean, things are
swinging.
Yeah, things are up and down all over the place.
Yeah.
We're also seeing this trend towards deglobalization.
Okay.
Kind of a shift away from
Yeah.
this, fully interconnected global economy.
Okay. And then, of course, you can't ignore the continued growth of AI.
Right.
That's a huge factor in all of this.
Absolutely. Yeah.
Sectors with potential.
Okay.
I think, AI and software are still looking really good.
Right.
U.S.-focused companies,
Oh, yeah.
kind of playing on that deglobalization trend.
Right.
And then more stable sectors,
Yeah.
like those consumer goods, energy, that
Yeah.
kind of thing.
Okay.
And then we talked about those select Chinese tech companies.
Right.
Infrastructure
Yeah.
is another area that could do well.
Like what kind of infrastructure are we talking about?
Things like data centers, logistics, that kind of thing.
Okay.
And then, of course, gold, as we mentioned.
Right.
So those are some areas to keep an eye on.
Okay. So what about for, the individual investor? Like what are some of the investment approaches that people are using in this climate?
Well, I think the big one is just diversification.
Yeah.
I mean, that's always important,
Right.
but especially now
Yeah.
when things are so uncertain.
Ah.
So you want to make sure you're not putting all your eggs in one basket.
Right.
Another approach is value investing.
Okay.
So that's basically, finding companies that are maybe undervalued
Right.
by the market and
Okay.
kind of betting on them for the long term.
Okay.
Growth investing is still an option,
Yeah.
particularly in areas like AI, but
Right.
that obviously comes with more risk.
Right.
And then there's income investing.
Okay.
So that's things like dividend paying stocks,
Right.
bonds, that kind of thing, where you're trying to generate
steady income.
steady income.
Okay.
So those are some of the approaches that people are using.
Okay. So if we kind of zoom out and look at the big picture again.
Yeah.
We've got a global economy where inflation is generally cooling,
Right.
but with some differences depending on where you look.
Exactly.
Central banks are probably going to start easing policy,
Yeah, seems like it.
and growth is moderate.
Mm.
But there are some challenges, particularly from
Trade tensions.
those
Yeah.
trade tensions and those U.S. tariffs.
Yeah, the tariffs are a big question mark
Right.
hanging over everything.
So I guess the big takeaway is diversification
Diversification.
and patience,
And patience, yeah.
like a long-term view.
Absolutely.
Yeah.
Don't panic.
Don't panic.
Exactly.
And one thing I was thinking about as we were talking about this whole idea of deglobalization
Right.
and, this trend towards maybe more domestic focus.
Yeah.
It makes me wonder, for the learner out there,
Yeah.
how might smaller businesses, more locally focused businesses,
Yeah.
how might they adapt to all of this?
Right. Could they even benefit from it?
Could they benefit
Yeah.
from it? And could that create some interesting investment opportunities?
Yeah. I mean,
that maybe we're not even thinking about right now.
Right, because this report was really focused on
Right. It's a global.
the global
Yeah.
picture.
It's a global picture,
Yeah.
but, if things are
Hmm.
shifting in a more local direction,
Yeah.
there might be some real opportunities there.
Absolutely something to think about.
Something to think about.
Yeah.
All right. Well, that's our deep dive for today.
Thanks for having me.
We'll see you next time.